Hey, welcome to this week's video. One of the big things we do as entrepreneurs is hiring and paying employees. But the area of payroll and the related laws are extremely complicated and can get entrepreneurs in serious trouble if not done correctly. Some of the big areas of concern include classification of employees, paying them, wage and hour issues, exempt versus non-exempt, tracking breaks and lunches, and changes in payroll taxes. Our job as entrepreneurs is not necessarily to do this work, but make sure we understand so we can ask the right questions. So in this video, I'll walk you through some of the common payroll mistakes I see and how you can avoid them and the types of questions you can ask so that you can make sure you get this right. So let's get to work. Okay, so let's talk about independent contractors versus employee. Just Google Uber drivers as independent contractors or not, and you can see how complicated this issue can be. This is probably one of the biggest issues I see in companies and probably one of the most complicated areas. But how to determine if someone you're hiring is an independent contractor or an employee is extremely important and can have negative consequences if you don't get this right, such as wage and hour issues, payroll tax and penalties, maybe workers' comp issues, payment of sick time. So how do you determine if your worker is classified correctly as an employee or a contractor? Well, states have different rules, and even the IRS states that there is no single factor, but does offer some things to consider, such as behavioral control, in which you exercise control over your worker's time, the life, and how to do the job. It's not the ultimate outcome, but rather how they get to that ultimate outcome. Financial control is another one. Independent contractors have an investment in their business, like equipment, licensing, and aren't reimbursed for expenses like supplies. Relationship is another one, where if your worker directly impacts the core work of your business, it is more likely that the IRS would view them as an employee. Also, the permanency of their work would be a factor as well. The bottom line is don't ignore this issue, as the consequences can be devastating. What I would recommend is that you check with a labor attorney or HR professional with knowledge in your industry of this, because trust me, you don't want to get this wrong. The other issue I see is misclassifying employees between exempt and non-exempt. Exempt employees are your salary employees, while non-exempt are your hourly employees. Hourly employees are subject to wage and hour rules, which can vary from state to state, while exempt employees are not. Let's face it, tracking hours and the wage and hour rules are a pain, but it's critical that we apply this to the correct employees. So to be considered an exempt employee, you basically have two tests to follow, called the duties test and the pay test. If they fail one of these, then you probably should classify the employee as non-exempt. The first is pay. Basically, it's a minimum salary, which generally is 2 times the minimum wage. So for example, if the minimum wage for your location is $14 an hour, then you would take $14 times 2, and then you would multiply this by 2,080 hours, which is the working hours in a year, which would get you $58,240 a minimum salary. The next test is a little bit more complicated, and it's called the duties test. This is complicated, but basically the employee could pass this test if they meet one of the 3 exemptions, known as either the executive exemption, administrative exemption, or professional exemption. The executive exemption is really the employee basically manages 2 people and does or is involved in the hiring and firing. The administrative exemption, the employee does work related to the management of the business and has the ability to exercise independent judgment. In the professional exemption, the employee has some specialized knowledge in a highly specialized field, like science. The bottom line is, if you're going to pay your employee a salary instead of hourly, then you might want to check with a professional on this. Even the biggest companies get this wrong. I used to work for PricewaterhouseCoopers, and they even got this wrong in classification of certain employees and had to pay a lot of overtime pay back to those employees. You can Google this as well. It occurred in 2011. So the next is miscalculating overtime pay. This one seems obvious, right? Anything over 40 hours in a week is overtime, but it is unfortunately not that simple. For example, in California, anything over 8 hours in a day is overtime, even if you work less than 40 hours in a week. So overtime rules can vary from state to state. Also, states may have different rules for double time as well. The bottom line is that you must make sure that you have a good way of tracking time and you understand the overtime rules and are paying it correctly. Failure could be a costly mistake of back wages and possible penalties. Okay, the next one is miscalculating taxable income. And this is another one that seems obvious, but it gets missed. Your system must have the ability to properly track sick pay hours, for example, as you're required by state. And these rules may vary from state to state. Vacation is the same, including rules if you have to pay out vacation or vacation carries over to the following year. Check with the rules in your state. Also, any other pay, such as commission and bonuses, need to run through payroll and shouldn't be paid via 1099. In addition, some states like California, you're required to furnish your employee with a pay stub for each pay period showing the calculation of pay. Make sure that this is being done, or you could face penalties if this isn't. The bottom line is make sure you understand the rules and your system is properly handling the calculation of pay, and check with a professional if you have any questions on this. Okay, the next one is not giving and or tracking breaks. Another area that is important is that you know the rules for your state in regards to breaks and meal times, which applies to non-exempt workers. For example, in California, you generally are required to provide 2 paid breaks and a non-paid lunch of 30 minutes. Usually the lunch break has to happen after a certain number of hours work, which I believe is 5 hours. And it is mandatory the employee takes a lunch even if they don't want to. It's also important that tracking breaks and lunch as required for your location is documented should you ever be questioned. So make sure you track this and that your employees are following these mandatory breaks and lunches. Okay, the next one is missing deadlines. And there are different deadlines and rate changes that vary from state to state. For example, California, the unemployment rate usually changes on a yearly basis. Also, there are quarterly deadlines, yearly deadlines, and varying deadlines for making payroll tax deposits, which actually can vary from company to company. So you need to make sure everyone knows the deadlines and the rates, and this is being monitored and done properly. So some key takeaways, payroll is complicated, and it's probably best to utilize a professional or utilize a payroll company to do this. The things that you need to consider is make sure you review the classification of your workers and you get that right. Make sure the pay is correct, and make sure that hours are being tracked and paid correctly. And I think the big thing is make sure that you document this and have this in your records so that if you ever question, you have this available to be able to prove that you've done this correctly. Okay, so that's it for this week's video. If you got any value out of it, it'd be great if you hit the thumbs up. And if you're not a subscriber, it'd be awesome to have you on board. Until next time, I'll catch you on the next one.